What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online, as usual. Today, I'm going to do some due diligence on the Dolly, which is Mogul's. It's actually not their most recent listing. It looks like they have a new one today, a few days behind in getting to this one. They've almost sold out half of it already, but it's a pretty big raise, so I thought we'd have more time, and it is a short-term rental, which also made me think it was going to be a bit slower. But they're raising $728,000 in equity, but they've already sold out $358,000 of that, so it's moving pretty quickly. So this is a short-term rental in Pigeon Forge, Tennessee, which is like the Pigeon Forge, Gatlinburg area. It's in the Smoky Mountains. If you don't know, they're calling this the Dolly. I hardly ever get their names, but they're calling this the Dolly because this is right by Dolly World. It's one of the things in that area. So it's this is a short-term rental. It's purpose built for that. It's in there's a pool in the home. It's gigantic. It's almost 5,000 square feet, 6 bedrooms, 8 bathrooms. It's supposed to, so the listing here says can accommodate 40. I think this might be a typo. In the contract, they said it's contingent upon getting a certificate of occupancy that says they can have 20 guests. And the listings that I've seen, if I found this property and similar properties to this, because there's several that were built that are, I think, basically the exact same property. And they say they can accommodate 20 guests. So I think that 40 might have been a typo. If not, that just seems crazy. But anyway, it's been operating for the last 2 years. And they said, in their projections, their year one underwriting projections are below the operating history from 2024 and 2025. Which is, I always like that when they have in-place income. I'm going to look at the AirDNA in a little while. And so, that's where I usually go to try to verify that. Seems like maybe I don't know. It doesn't quite match up. And so I'm going to talk about that a little bit. I don't know a ton about the Pigeon Forge market. Other than, this was one of the main, I think of them as meme markets. Like there were certain markets when short-term rentals really exploded that just everybody flocked to. You think of like Joshua Tree, California. That was probably the number one that I saw, tons of YouTube videos about, tons of posts on BiggerPockets. But Pigeon Forge in the Gatlinburg, Tennessee, like the Smoky Mountains in general, I would say was probably number 2 or 3. There was a Florida market. I can't think of which one, but there were some Florida markets that got a lot of attention as well. But this is one that just seemed like, there was someone on BiggerPockets on that podcast a few times, and but that posted in the forums all the time about this market. I think they even put out a book through BiggerPockets, possibly. I'm not 100% sure about that, but so it was a market that was talked about quite a bit, and I think a lot of those markets sort of got overbought, but they also and one of the reasons this one did really well is because during COVID and right after COVID, it was a market that performed extremely well. Well, there was a lot of people going to national parks, doing stuff outside. How whether or not that's going to continue is yet to be seen. And so it's a super small market though, right? It's a 6,000 population. It has been growing very fast, but when you start with such a small number, it's kind of easy to grow fast. I don't think that's where the value of this property comes from. These aren't homes that are being bought by someone to live in, right? This is definitely just, you're buying a little hotel here. And so we're going to look at the Zillow and Realtor and Redfin numbers. And actually in this market, they probably are pretty reliable because they're just looking at sale comps, and just about every property in this market is going to be a short-term rental. So let's see. But I looked in the county for, this is the county data, and even the whole county is less than just over 100,000 people. That market's been growing pretty fast. But there, obviously, if you're going to invest in this, you should read up on the market, understand, what the draw is, and really try to, one of the things that I wonder about, like when I'm thinking about short-term rentals is, there's a lot of different things, but how long is Dollywood going to be a real attraction, right? She's not anywhere near the star she was like in the 80s, say, right? I mean, you would hear about her a lot, maybe even earlier than that, but so I don't know about that. I don't necessarily think that's where. I think the national park actually is. Well, I think they even say it here, right? I think it's the most visited national park in the U.S. I'm not 100% sure about that, but it's definitely high on the list. But like, okay, is that a destination that people are going to keep going to? Those are things I'd want to think about. I don't know what I'm thinking about. I don't really like pure vacation markets when I'm investing in vacation rentals. I would rather have a market where that home derives its value from it being, from the potential of it being an owner-occupied property, but it's in a market that it also does well with as a short-term rental property. I think that just gives you a little bit more protection, a little bit of ability to pivot or sell if something happens, to the short-term rental market overall. It doesn't like kill your pricing. Like this market, if short-term rentals stop doing well there, these property values would plummet, right? Like there's not some other demand for people buying a property like this property here. It's not a strong demand for just owner occupants in this market is basically my point. So let's see. What do we want to talk about this? Okay, they have this listed as a core, although, yeah, okay, core on both. For some reason, I thought I had seen core plus. Oh, I think I looked at their next property is 11.5% average yield, 12.1% annual IRR. I did shut off the refinance assumption, and it didn't change it that much. I always like to do this, and yeah, it went to 11 and 11.1. But one of the things I thought was interesting to see is that their loan assumption is 6.375. This is lower than it has been in the past. I think we had been at 3.875 on a lot of the previous ones. So, rates have been coming down. It's good to see. I think that's going to help deals. Although as rates come down, I think properties are going to get, it's going to get more competitive to buy properties as well. This is a property that was listed on the market for sale. It was listed, I think, at 1.6 million. I don't even say this yet, right? We have it under contract. I say we. I'm not invested in this yet, and I'm not sure that I will be. But for 1.55, so a discount to the list price, and we'll look at valuation and see is it really a discount to the actual value. Our contract, I pulled it up. It does have a financing contingency. It has an appraisal contingency. One of the things that I didn't see anywhere is like a personal property addendum, so saying like something that's conveying all of the furniture, fixtures, and equipment. I couldn't find it anywhere in here. Every market handles this a little bit differently, or at least each state does. Sometimes individual markets do as well. I could have just missed it also. But one of what I think they might be doing, if you look at the breakdown, this is their reserves and closing costs. This is 17% of the total purchase price. So maybe there's some money being paid separately in a separate agreement for the personal property. I don't really know. That's one of the things that I would love it if when they gave us these little blurbs, they'd say, I'd like more detail, right? Like why do we have such a large closing costs and reserves on this one? Is there additional work being done? Is there an expense? Are we paying for the furniture, fixtures, and equipment outside of closing? Something like that, because that's a possibility. It's also possible that there is a personal property addendum or a section on that, and I just missed it. I think that's possible. So if anybody's noticed that, let me know. I did go through this pretty quickly, but this is that section where they said they want to make sure that they have a CO for at least 20 guests. So that's why I think that 40 might be a mistake. All right, let's see. What else? I'm going to close a couple of tabs so I don't just have too many open. Looked at the FEMA flood map. Looked like we were doing perfectly fine here, so that was good to know. You can see from the topography there we are in the Smoky Mountains here, and so one of the reasons that's super important, and it's going to make it hard. It's really hard to look at comps in markets like this without really understanding the topography, because views become really important, right? If you could have two identical properties, but if they're situated differently, so if the buildings are identical, but one of them has fantastic views and the other one doesn't, you're going to have a very large divergence in the performance. So that's something you want to keep in mind. We have a market near me here in San Antonio where it's pretty hilly and it's by a lake, and it's called Canyon Lake, but they I've seen people get in a lot of trouble buying properties that they just didn't understand it was never going to perform as well as the one with lake access or the better view or whatever it was. And so that's one of the things that I think when we're looking at comps here is going to be pretty important, because we clearly don't all have the same view. Especially, I think some of these interior ones might actually be a little higher up, but it's something to keep in mind. So let's close that. When I tried to look at the spot crime map, it just pulled up all this crime over here. I don't know if that's just a data problem, if there's just not stuff being reported here, or if there's just really not a whole lot of crimes that get reported over here. I have no idea. My guess is it's not a huge high crime area, but obviously that's something you could use the neighborhood scout or some other source. If anybody's done that, I'd be curious to know what you found out. Okay, let's see. What else did we do here? Oh, so let's jump into the valuation. This is the Zillow listing. Like I said, it was listed for sale. Obviously, it's a cabin type theme, even though it's new construction. I think this was a 2020 build. I did notice this. I don't know what's going on. Like if this is just condensation on the walls. I don't know. But so that was one thing I was curious about, like what's actually going on here, because you can see it all over here. But obviously, one of the things, I've mentioned this lots of different times. Oh, before I forget, please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online. Please do your own due diligence on all of those properties and those platforms. Just because I'm investing on them doesn't mean that you should. You always want to dig into each property, think about how the risks and everything like that for both the properties and the sites themselves, because some of these sites are not great, right? Some of the ones that are selling fractional real estate are really, I don't love them. So make sure you're doing your own due diligence is my whole point. Just because I buy them doesn't mean you should, and just because I pass doesn't mean it's not a deal that might be right for you. And also in the description of this video, I have a link to the Discord I have set up. We have over 200 investors that have signed up for the Discord, and we're just in there sharing ideas, talking about all the different fractional real estate platforms that we invest in. Okay, so back to this. What was I saying? So you want to do, I got sidetracked, and let me think. So I was looking at the listing. Anyway, we'll just get into this. Wow, sorry about that. Well, I'm going to get into the valuation. I'm sure I'll remember it, and I'll get back to whatever I was just saying. So it was listed for $1.599. It's under contract for $1.55. The Zestimate here is $1.4999. So Zillow thinks we're overpaying for it by about $50,000. It is, when we are buying a property that is an existing business, they're going to keep the same management in place. I think there's a lot of value in that. Like I said, I don't know what the deal is with turning over the furniture, fixtures, and equipment. And so maybe That's part of why we're paying up for it a little bit too, although we may be paying that outside of closing. Like I said, I'm not sure. It seems like we have a big chunk of cash for something. Maybe there's some repairs. I don't know. Oh, and I know what I was starting to say before I got sidetracked. So, I've come to really trust Mogul's process as far as, they do a home inspection, the way they address stuff. They have backed out of several deals that they didn't like the outcome. And so, I do like to look at all the pictures and see, okay, are there issues with this property? But at the same time, I've come to sort of trust, their judgment on some of that stuff. Now, that just because I do doesn't mean that you should. Then that's what got me on that whole do your own due diligence discussion. But anyway, this says comes with certificate of occupancy for 40. It's weird that the contract is, has it only contingent for 20. Wonder what's happening there. That'd be something, if anybody's asked and they know, I'd be curious to find that out. So anyway, Zillow thinks we're overpaying by about $50,000. Realtor, let's see. So they also have one here. They say no real estimate. I thought I had seen it. Oh, this home. Yeah, never mind. We don't have one from Realtor. But Redfin thinks it's 1.527. A lot of the times when I don't invest in a property on Mogul, my problem with the investment is I think we're overpaying. Here, $50,000 on a 1.5 valuation. I think that's within it's within a margin of error that I think it is. I'm not terribly worried about, okay, are we paying, and according to Redfin, are we paying $23,000 too much, right? Are we paying $50,000 too much? Especially because we are getting it as an operating business and keeping the same management in place. This valuation itself doesn't bother me. If everything else was perfect about this and I was excited about buying a short-term rental with these numbers and everything, and I'm going to get into that, then I don't think that I'd let this bother me. But this is one thing that I wanted to, it'll be when we get into the other market. You can tell I'm still definitely a little foggy-headed, still taking the cold medicine. Let's see, let's do this. I don't think I left that tab open. I always like to look at this Zillow home price trends. Yeah, so it's for this zip code, home prices have gone down 8.4% for the last year. You can see this is a little different shape than we're used to seeing, right? There was a peak, and it's really just been in steady decline. And this is the market that I could imagine just doesn't, it does. Zillow thinks it's moving up, and this is flattening out. But I think this is a market that just got a lot of attention during a certain period of time and might not necessarily come back in the same way that some of the other markets did. I mean, this run-up was just crazy. And it was. I mean, this was a very popular market for a lot of novice investors. So it does worry me a little bit. This is not, even though it is a very... it's a very mature vacation rental market. The pricing just went crazy over this period of time. In a way, we saw, like I said, we saw this shape a lot of times, but most of the markets we've seen a little bit of we've seen them come back a little bit, and that's not the case here. So, it feels like maybe we're overpaying by a small amount, but more worrisome is, okay, is this a market where the pricing is going to continue to go down, or maybe it's just never going to, maybe it's going to creep up, but it's going to come up very, very slowly. It's going to be tough. It's going to be tough to know, right? At some point in time, this market will probably boom as a vacation rental market again, and then maybe prices move then. But it is, it does worry me that sort of the moment has passed to really be investing in this market. This is one of the things I want to show you. Okay, when I was talking about the views, it's one of these two properties. I'm actually not sure which one it is because I've moved this around. Yeah, it is this one actually, I think. But so you can see if we look over here, doesn't look like we have any kind of view. That property being higher up, maybe it does, right? Maybe they're looking out. It's tough to know. But so of these ones, and you can see that property looks like it's exactly the same one as this one, which is exactly the same one as that one. And I think that there's several that were built. And so, some people are going to be like, oh, well, we expect them all to perform the same. But no, that's definitely not the case, right? The way that they're situated, some may do much better than others. Let's see. I'm going to go into the AirDNA, the market. So the market overview, Gatlinburg, Pigeon Forge. It shows it as 79%, or 79 market score. That's not great, and you can see revenue growth is what's holding it down. It's actually gone, annual revenue declined, occupancy rates declining, average daily rates declining, and obviously RevPAR is declining, right? So it doesn't do well there. Rental demand and investability, I don't know why those are so strong when, what they're doing separately. You can obviously dig into that a little bit. I think, that's sort of looking at the prices relative to the income, but I'm not 100% sure that's what investability is. Seasonality, this is one of the reasons that I don't love it. I don't like seasonal markets, right? Because it's a shorter time. You have less margin for error when you have a problem. Let's say you have something breaks in the property during your best month of the year, and that if you only have 6 good months, say, and it's down one of those 6 months, versus if you have 12 months and it's down one of those months, it's a much different outcome, right? And so that's one of the things I try to avoid, the real seasonal markets when I'm investing in short-term rentals. Which is, a lot of people think about, oh, well, I want to have ski markets or beach markets or whatever it is. And I don't know. I think that is, if you think about it, it seems like the obvious choice to be in these vacation markets. But because a lot of them are seasonal, it increases the risk in a way that I'm not extremely comfortable with. But so, okay, this is the Gatlinburg Pigeon Forge market, but looking at actually the Pigeon Forge submarket, it's a little bit better than the market overall. The revenue growth score is a little bit better, which is weird because it's shrinking faster. All right, annual revenue went down more, average daily rate, and RevPAR as a whole, right, is negative 4% versus negative 3%. So that's really weird, right? That it somehow has a higher revenue growth score. I don't understand how that works. Most of the other stuff is the same, but this is really worrisome for me, right? Like, I don't want to be investing in a market where we have we have a downward trend on the revenue side, and then I couldn't figure out if I had the right properties or not. This looks like it's ours, a huge cabin with a pool. It is at least one that's built just like ours. But this says, it only had $95,000 in annual revenue. Now it's only picking up VRBO at this listing with $95,000. But then this one, is, only had 77,000 that was picked up, and this is Airbnb and VRBO. Now, if you looked at Mogul's listing, they said, well, we have, they're projecting 230,000, I think, in year one revenue. Let's look, or 228,000. And they said that 2024 and 2025 were above that. I think this, one thing that could be going on is, and this happens in a lot of mature markets, is Airbnb and VRBO aren't where most of the bookings actually happen. If you see, okay, this was only available 200 days, and the other one I think was even less days. Let's see. Let's open it back up. Oh, what happened there? Oh, no, it was actually available 214. But so, it's possible that all those days that it was unavailable, it was actually just listed directly by the property manager, or through some other sites, because there are a lot of other sites. And so I think that could be what's going on here. But it always worries me, right? Like I normally want to have third party confirmation whenever I have numbers that we're looking at for underwriting. Now, this is a situation where I have come to trust Mogul quite a bit. I think that they are savvy, real estate investors, and so far they haven't done anything that's really made me, trust their judgment or think that they're, just pulling numbers out of thin air or something. At the same time, I'd like a lot more transparency, right? I'd like to understand, okay, they're saying, it's doing better than, or, they're projecting, what's the blurb actually say? What did I miss it? Oh, it's up here. Yeah, the property has multiple years of operating history with 2024 and 2025 income exceeding year one underwriting, right? I'm happy to see that. I'd love to see, okay, well, what does that number look like, right? Was it actually just 230? Is it trending downwards because they do have multiple years of it? I guess it's probably not, if only the last 2 years it exceeded it. But yeah, obviously I'd love to have more transparency around those numbers, especially because AirDNA is not doing a good job of supporting it. And I was looking, and there really was only, this is the only one that's done better. And if you notice, what's the first thing in the listing? It says epic views and pictures of those views. And I'm not sure actually if this property is exactly the same kind of cabin either. Is it? Oh, let's close that. No, I think it's not. Yeah, it's a little bit different cabin overall. But this is the competitor that's actually made the most money in the market that's showing up on the comp set. Or there's a 212 also. But it is, obviously it's doing well. The views are helping it, right? Like if you look at the average daily rate, it's $200 more than what we're getting here. And I wouldn't say, oh, well, we can bump ours up to that. No, they're just getting a big premium because somebody that's spending a lot of money to go stay in the mountains, some of those people are willing to pay even more to really get that full experience, right? And so that's what I think is going on, and why it's important to really, take a look at that. And when we're looking at comps and when we're, comparing properties to understand that, this is not necessarily the view that people want to pay for, I don't know. But I mean, people are paying something, right? I mean, that $228,000 in revenue is certainly, a decent amount. It's just not necessarily going to be able to match those higher comps. So that's all I wanted to mention about that. The other thing too, I don't know, I haven't talked about this in a while. I guess we just haven't looked at short-term rentals in a while. I was looking at the 228,000 divided by the purchase price, to get a revenue to price ratio, and this is 1.47. In my market, this would be a very low revenue to purchase price ratio if, especially if you're not including the furniture, like if that's being paid separately out of some of those additional funds that are being raised. But one of the things that I noticed is their property tax amount and their the homeowner's insurance, I don't know, but the property tax amount is definitely lower for the amount of, for the value of the property than I'd pay here in town. So that's one of the reasons in Texas, because we do have a relatively high property tax rate, our revenue to price ratio might need to be a little bit higher than in some other markets. So maybe 1.4, it's not terrible, but it is, also it's part of the reason why we don't have great yields, right? Year one rental yield is 7.9% is what they're projecting. So, okay, let's wrap this up though. What do we think? Yeah, year one rental yield is not great. Now maybe it's a conservative projection because, the last 2 years that it was higher. We don't really know exactly how much higher. AirDNA wasn't helpful for that. But we can see that in the market, the RevPAR, average daily rate, revenue per available room, all of that is declining. So that's a little worrisome. Obviously, it's going to be the economy and how much people travel and all of that is going to be cyclical. So maybe it goes down, maybe it comes back up. But maybe we've really seen the heyday and the peak in popularity in this destination. That's one of the things that just worries me, right? I think that especially right after, during COVID and right after COVID, you saw a lot of these sort of outdoor national park, like, get away from people and go into the woods type places do really well. And so both from a, income perspective, and then also you saw a lot of investors flock to those markets. And so you saw, a big boom in pricing. And so I worry a little bit that we're buying a property that is, maybe past its heyday as far as both of those things go, right? Now, maybe not. It's like I said, it's possible that this does, the line for valuation looks like we're flattening a little bit, even though this is a much, much worse trajectory than we've seen in most of the markets that we've looked at, right? Most of them had, this is just such a big dip from the peak. And most have came back a majority of the way. So that's what, one thing that worries me. It is a 2020 build, which is nice, right? So it's, I think from a CapEx perspective, maybe, we have, and, maintenance and all that. I think all that stuff, that's a positive for it. It's also purpose built for this, right? Which is always makes it a more efficient property to operate than when you just have somebody that bought any home in some market to operate as a short-term rental. But on the flip side, like I said earlier, it's a market where these properties completely derive their value from the fact that this is a vacation rental. And, you're not going to be selling these to owner occupants for $1.5 million, more likely than not, right? For all of those reasons, on net, I'm going to pass on this one. I've never been a fan of chasing the most popular markets. I have moved my investments in myself a lot to be in different markets that I believe are undervalued. But I think that by the time that most of the internet is all over a certain market, where that's sort of like the last 6 months that you can buy something, right? Because people kind of move slowly. But, like I said, this market probably 2 years ago now was the peak of just hearing about it on Bigger Pockets all the time, people in different forums and whatnot. So I don't know. I don't love this one. If you just don't have a short-term rental, if you're just looking for some more diversification, you're looking, you want to be in a different market, like this might be a reason why I would do it, right? If I want to be in a different market, I want to add some short-term rentals because I've only, especially if you're only on pad or only on Mogul and you've just bought a couple of pad splits and you're looking for some diversification, I could see buying this. Like, I don't hate it. It's just, it's not very exciting for me. I think, and that's been sort of my take on a lot of the recent Mogul properties. I did buy one a couple weeks ago, right? But I'm just being pretty picky with them. They haven't opened their secondary market yet. And so understanding how things change when that happens will be interesting. And and I have 15 or 16 properties with them now. And so, until I really have a very, more data on how they perform over time, especially my short-term rentals with them haven't done great. So I'd also like to see if that starts to turn around. But yeah, I don't know. I think I'm definitely going to pass on this one. For all those reasons. And I think I'm curious if you are going to buy this one. I'd like to hear about it, right? Like what, put it in the comments, put it in or jump in the Discord and let me know, what about this? Just because, I have certain feelings on as far as like pure vacation markets, right? Maybe you think differently about that, right? Maybe you want to own vacation rentals in vacation markets. I mean, that sounds like the more obvious strategy. I just think that it is more risky because you don't have this backup valuation of people actually just wanting to own and live in those homes. But anyway, if you've decided to invest in this one, let me know why. Drop it in the comments. I feel like there's one. You can tell I'm like trying to kill some time because I feel like there's one other thing I wanted to say about this one, but I don't remember what it is. I really like that. Oh, they're using this. It's the same manager, right? So if there are, if you can have a seamless transition and actually just like pick up money immediately, I mean, that's nice, right? Not having that transition period. I don't think I mentioned that already. I might have, but anyway, that even though I like that, it's not enough for me to really want to buy this property. And the other thing too, if because short-term rentals are such, it's really a arms race for amenities. If I were going to buy a cabin like this in this market, I would want to buy one. If there are multiple that are built the same, I'd want to buy the best located one, right? Because, obviously you might end up having to pay up a little bit, but if, trips to this market go down and there becomes more competition, if we start to compete for guests a little bit more, I want to have the nicest property in the market. That's what's worked in our market here in San Antonio, having a really premium product. And so even though this property itself looks fantastic, I think it's they've added all the bells and whistles that you want to. I think the way it's situated, not having any particularly good views, is going to hurt it compared to an identical property in a different part, situated differently. And so I think that I'd want to shop a little bit more and do that. Because you don't want to have the least appealing property in the market, because you can always lower your price if you have to, but you can't change the location. There's all the amenities are already there, right? And so you're kind of, if it starts to underperform, you're kind of stuck, right? I mean, you don't ever want to be stuck in a situation where the only way you can compete is competing on price. And that's, so that's why. But of course, if you're getting a much cheaper price, when you're buying it for the revenue, it's a reason why you might. Anyway, I think that's really now all I'm going to say about that. Until next time, I'm going to just keep making mistakes so that you don't have to.